Hi, thank you for watching another Paper Assets Group LLC presentation. Today we're going to be going over funding partners. A little bit about myself. My name is Anthony E. Reese. I'm the CEO of Paper Assets Group LLC. In '97, I got into construction with the union, working residential, commercial, and industrial. In 2003, I got certified as a California home inspector, as well as flipping my first property. In 2004, I flipped my second property, and I learned a lot in that year about real estate investing. In 2006, I became a realtor for California. From '07 to 14, I just got into the education part and really understanding different niches, which led me to 2015 and note investing. Paper Assets Group LLC. We are a real estate investment group based out of Southern California. We specialize in non-performing promissory notes. We invest in first position, owner-occupied, non-performing, single-family resident promissory notes. We look for distressed borrowers with toxic or bad loans, and we want to rehab the loan, not the property. We raise capital by working with our funding partners to purchase the notes, to offer the borrowers options to keep them in the home that traditional institutions don't or won't offer, and it allows our partners a greater return on investment than traditional investing. So what is a promissory note? When you buy a home, two papers are created or signed, a promissory note and a mortgage or deed of trust, depending on what state you're in. The promissory note contains the promise to repay the loan, basically an IOU outlining the terms for repayment. The mortgage provides security for the loan amount borrowed. The lender or the bank holds the note until the loan is paid in full. So why do banks sell these notes? Banks are not in the real estate business. They're in the loan business. They sell performing notes for a quicker turnaround to loan out more money to create more loans. So Wells Fargo originated a loan. 6 months down the line, Bank of America sends a note saying that borrower now has to pay them. Wells Fargo sold it off at a discount so they could just recoup their money and create more loans. Non-performing notes become liabilities. Too many bad or toxic non-performing loans, and bank regulators can shut down that institution. Banks can show a loss, and they have what's called a gap clause. They know that for every 100% of loans that originate at 5% or more will not perform. So how do we obtain our notes? We get them directly from the banks, hedge funds, private investment firms, and private investors. By working with our funding partner, it shows these types of institutions the buying power we have as a group to purchase these notes and allowing us to receive bigger tapes at bigger discounts. So a typical note looks something like this. The seller is asking around $30,000 for the note, and that's about 40% of the unpaid balance. We see that it's a first mortgage, non-performing, conventional loan. The maturity date is in 2045. It's a single-family residence. They owe $77,000, and the market shows that it's appraised around $77,000. We look for properties that have little or no equity because it makes it easier for us when we're working out with the borrowers. Some of our exit strategies. We want to always try to first reinstate the loan by getting it reperforming, and we can use that as residual income, or we can refinance it out to another bank 12 or 18 months after we have it's sitting with our servicing company showing that they've been making their payments. As the bank, we can also modify the loan by either modifying the interest rate or the total payoff, being that we get them at such a discount. If the borrower isn't one that wants to continue with the loan, we can always see if a family member or a friend wants to assume the loan. We can approve a short sale. We could do a deed in lieu or a cash for keys if they want to leave the property. So instead of putting it on a foreclosure, we won't report it. Or we could give them cash where they can go and find something that they can afford for themselves. We can also resell the loan to another investor or wholesale the note at 50 or 60% if we get it at 30 or 40%. And the off chance that we have to foreclose, being the bank, it becomes an REO that we own. So now we can turn this property into a rental. We can fix it and flip it for retail. We can do a lease option or offer owner financing. We could live in it. Or we could hold it in a trust or a IRA or some type of a land contract for our future generations, like our kids and our grandkids. So what is the process? Well, we receive the asset tape from the hedge funds, the banks, and the private investors. We review the bidding timeline. We filter out by criteria, and then we do our preliminary due diligence. We check our values, our online pictures, preliminary title search, possible rents in the area, and we pre-approve the borrower. So we try to find our borrowers by looking on social media like Facebook, Instagram, LinkedIn, and seeing what kind of jobs they have, if it's something that we're going to be able to get them on a repayment plan, and just want to really work with them to keep them in this property. We research the neighborhood, and if everything comes to what we like, then we go ahead and purchase the note. We then contact the local realtor. We ask them to take updated pictures. We ask them for a broker's price opinion, which to see if our comps are coming in at what we think it is. We order title. We get with our servicing company and let them know that we now own that note. We talk with our loss mitigation company to tell them the workouts that we're wanting to work out and see what the borrower wants to do. We start a foreclosure, and the off chance that we need to do a foreclosure down the line, it's just better to get it started sooner than later. We do our collateral check to make sure everything's in the file that needs to be there and that nothing is missing. And we order insurance while we're holding the note in case anything were to happen to the property. Some members of our team, with years of experience, we have a lot of outsourced companies that we just can't do this without. Again, my name is Anthony Reese. I'm the CEO and manager of Paper Assets Group, LLC. We work with Laughlin Associates for our legal services, Pro Title USA for our title search, Quest IRA for our self-directed IRAs, Credit Sense for those that want to better their credit scores, Polaris is our mediation company, Madison is our loan servicing company. We work with local realtors in the areas to give us a first-hand look and updates on the information. And obviously you, our funding partners. Without our partners, the team is incomplete. Individuals don't make big wins, teams do. If you're interested in learning more or partnering with us and becoming a funding partner for some of our notes, you can reach me directly at my cell line, which is 909-574-6085. You can email me at Paper Assets Group, that's assets with an S at the end, paperassetsgroup@gmail.com, or at anthonyereese@gmail.com. You can find us on the web at paperassetsgroupllc.com, or you can look us up on social media such as Facebook, Instagram, YouTube, Vimeo, LinkedIn by typing in a search of Paper Assets Group, LLC, or Anthony Reese. I look forward to working with you and see you.